What if there was an investment that paid more than junk bonds, carried less risk than most corporate debt, and was backed by the hardest form of money ever created? It sounds impossible. But such an instrument exists, and it may be one of the most important financial products of our time. And if you stay with me until the end, I promise you'll understand this cash-flowing investment that puts all other bonds, as well as most dividend-paying stocks, to shame. Prepare to have your mind blown. It's called Strife, or formerly called Strategy Series, a 10% Perpetual Preferred. And while the name may sound complicated, the idea is surprisingly simple. Strife promises investors a steady 10% annual cash yield indefinitely. No maturity date, no expiration, no reinvestment risk, just a perpetual stream of income. It's preferred stock that acts like a bond, only better. It's issued by MicroStrategy Incorporated. You may know them as one of the largest holders of Bitcoin in the world. How is it better than a bond? For one, Strife's payouts are not taxed as ordinary income. They are treated as qualified dividends, which means lower tax rates for most investors. This alone can make Strife as much as 35% more rewarding than junk bonds with similar yields depending on your tax bracket. And AAA or BBB rated bonds? Their yields are around 4.5% and 5% respectively. Half of what Strife pays. But Strife is more than just a high-yield instrument. It is a new form of monetary architecture. Its design fuses elements of high-yield credit, perpetual equity, and Bitcoin-backed collateral into a configuration the market has never seen before. That's right, Strife is backed by Bitcoin. Traditional fixed income has been quietly failing investors for decades. Government bonds pay yields that rarely keep up with inflation. Corporate bonds are weighed down by issuers struggling with heavy debt loads. Junk bonds offer higher nominal returns but fall short after taxes and inflation, and that's if they don't default. And then there's taxation. In the United States, bond interest payments are taxed as ordinary income, at rates as high as 37%. By the time taxes and inflation do their work, many bond investors are left with negative real returns. Strife turns that model upside down. Its coupon payment is perpetual. There is no fixed maturity, no reinvestment risk, and no forced redemption. Investors receive a 10% annual cash yield for as long as they hold it. And if MicroStrategy ever misses a payment, the coupon payment doesn't disappear. It escalates. Each year of deferral adds another 1% to the yield, compounding up to a maximum of 18%. This creates a built-in penalty for the company, ensuring that management has a large financial incentive to make the payments on time. In terms of capital structure, Strife is classified as preferred equity. It sits below senior debt but above common equity, giving it a strong position in the event of default. Investors enjoy the steady income of a bond, with stronger liquidation rights than equity holders and the potential upside if Bitcoin appreciates. There is also an important safeguard known as the Fundamental Change Put Clause. Strange sounding language, but it means if MicroStrategy ever abandons its Bitcoin holdings or undergoes hostile recapitalization, Strife holders can force MicroStrategy to buy their shares at face value plus accrued dividends. In other words, if management stops doing what it promised, investors have a guaranteed exit. But the most powerful feature of Strife is the collateral behind it. MicroStrategy holds more than 600,000 Bitcoin, tens of billions of dollars in hard money sitting transparently on its balance sheet. Against that, there are just over $9 billion in senior liabilities, including both debt and preferred shares. That kind of collateral coverage is unlike anything in the credit world. For Strife holders specifically, the coverage is 70-1. For all senior liabilities combined, it still has 6.5 times coverage. To put this in perspective, most junk bonds have less than 1.5 times coverage. And while their collateral often weakens over time, Strife's collateral strengthens. The break-even price of Bitcoin, where collateral coverage falls to 1-1, sits around $15,000 per coin. Bitcoin could fall more than 80% from current levels, and Strife would still be fully covered. That resilience is unprecedented in fixed income. What makes this possible is that Strife is backed not by government or corporate cash flows or depreciating assets, but by Bitcoin itself. Bitcoin is structurally scarce, globally liquid, and resistant to confiscation. Its supply is capped, its demand is global, and its value has historically increased over time. For the first time, a credit instrument is backed by money itself. And yet, despite these strengths, Strife is mispriced. It's got characteristics that some may think of as weaknesses, but others see as opportunity. First, it carries no credit rating from agencies like Moody's or Fitch, so it screens as a junk bond in many institutional models. Why no credit rating? Strife doesn't fit neatly into the categories credit rating agencies usually cover, and MicroStrategy hasn't asked for one. Not uncommon when your target buyers don't require it. Strife trades on the Nasdaq and has generated solid demand without a credit rating. Next, because it is linked to Bitcoin, traditional institutional investors hesitate, assuming it will have stock-like volatility. Finally, because the structure is new, it doesn't fit neatly into existing benchmarks or allocation buckets. This creates a rare arbitrage opportunity. Strife yields far above comparable instruments, not because it is weaker, but because the market has not adjusted. It delivers 4% more than the high-yield index and over 7% more than treasuries after taxes. In practice, this means 50 to 100% higher real income than its peers. Over time, as Strife proves its durability, becomes eligible to be included in an index, and gains recognition, these spreads are likely to compress. Early investors stand to benefit most, capturing high yields today while the broader market lags behind. But the story doesn't end there. Strife improves as it grows. Analysts describe 4 stages in its development. The first is its structural yield advantage. In a landscape where most junk bonds offer 7 to 8%, Strife starts at 10 and can escalate to 18. Even if Bitcoin remains flat for a decade, Strife outperforms almost every bond on the market. The second is its risk profile. Traditional bonds weaken over time as issuers accumulate debt. Strife becomes stronger as MicroStrategy accumulates more Bitcoin. With every additional purchase of Bitcoin, Strife's collateral base expands. This reduces risk and increases coverage. Strife is the inverse of a bond. Its risk decreases with time. The third stage is institutional adoption. Pension funds, insurers, and family offices manage trillions of dollars. Many face restrictions on direct Bitcoin holdings but can invest in preferred equity. Strife provides them with Bitcoin-backed yield in a compliant, familiar wrapper. Over the next few years, regulatory frameworks are likely to adapt, opening the door to multi-billion-dollar allocations. The fourth stage is index inclusion. Once Strife's float surpasses $1 billion, it becomes eligible for inclusion in major preferred share and income security ETFs. This triggers automatic inflows, tighter spreads, and higher prices. The cycle becomes reflexive. Greater demand lowers cost of capital, which enables more issuance, which buys more Bitcoin, which further strengthens collateral coverage. Each stage builds upon the last, creating a self-reinforcing flywheel. Yield attracts investors. Increasing collateral reduces risk. Institutions get on board. Index inclusion expands the pool of potential buyers. The process repeats, growing stronger over time. In the bigger picture, Strife is not just another income product. It is a philosophical challenge to the foundations of fiat credit. Fiat credit is just a fancy term for credit created and repaid in money issued and backed by governments. Legacy bonds are backed by inflating currencies and eroding collateral. Strife is backed by the hardest money in history. Bonds decay. Strife improves. Bonds are taxed at punitive rates. Strife offers favorable tax treatment. Bonds require reinvestment and carry duration risk. Strife eliminates both. It is, in essence, a weapon of financial reconstruction. A mechanism that siphons yield away from the decaying fiat system and redistributes it to holders of Bitcoin-backed cash flow. It doesn't require Bitcoin to reach astronomical prices to succeed. It only requires bonds to continue failing, which many investors already see as inevitable. This is why some describe Strife as the prototype of a new asset class. It combines the coupon payment of a junk bond, the seniority of preferred equity, and the upside torque of a Bitcoin ETF, but with less risk. It doesn't return capital like a bond, it monetizes capital like equity. And it does so while reinforcing MicroStrategy's Bitcoin holdings rather than diluting them. Zooming out, the contrast is stark. Legacy bonds draw from government-issued and backed cash flows that inflate and dilute. Strife draws from Bitcoin reserves that are scarce, and unlike fiat currencies, can't just be printed. Legacy bonds weaken as issuers decay. Strife strengthens as Bitcoin accumulates. Legacy bonds punish investors with ordinary income taxation. Strife rewards them with favorable dividend treatment. The conclusion is simple. Strife may be the most over-collateralized, tax-advantaged, yield-rich fixed income instrument the world has ever seen. Every time rates are cut, Strife looks stronger. Every time inflation lingers, its real yield improves. Every time MicroStrategy buys more Bitcoin, its collateral coverage expands. For investors who believe yield should be real, money should be scarce, and capital should be preserved rather than diluted, Strife is not just the best fixed income product available. It may be the only one that makes sense in a world of fiat decay. And that's the story behind the only bond-like investment you may ever want to own. As with many investments, the largest gains go to the early adopters, and that may be true with Strife as well. If you liked this video, please give a thumbs up, and if you'd like more updates on topics to help you grow your wealth, subscribe to our channel. Don't forget to click on the bell icon so you don't miss any videos and get notifications on time. Don't hesitate to give suggestions for our videos. See you at the next one.